here we are, beginning of another year. You earlier said that we're reporting on accrual basis when it comes to the reports, but I know I'm filing my taxes on a cash basis. How do we make those two tie together?
The biggest difference on an accrual and cash basis is the revenue recognition model, and the kind of trickle down there is the AR account, right? There's going to be some payables or liabilities that, yes, maybe some prepaid assets like insurance or something that would need to be adjusted and recorded differently so that on a cash basis they're not presented. But the biggest one's going to be how you're recording revenue and the AR balance from it. We're obviously presenting your financials with AR and revenue that's been billed, not collected. So whenever you do need those cash basis financials, when you're working with us and our tax team, or if you use an external tax provider, our team quickly converts your accrual basis financials to cash basis. That way your CPA or our tax accountant can use the information they need for tax purposes.
So if you're a service business and you want bookkeeping and financial reporting that actually answers these questions, hit the link in the description and we'll show you what FRAXN can do for your business.